From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for October 17th, 2016. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. This week's news calendar is quite full, so we could see increased trading volume and volatility. And you'll want to be sure to check your financial calendars for the latest releases and when they happen during your own personal time zone wherever you are in the world. Let's dive right into it. USDCHF, the dollar franc, we're looking at the daily time frame. Basically, since February of this year, 2016, we've been in a longer term range. I've had this black box on my chart for several months now. For members or anybody following the daily videos, that shouldn't be too surprising. We begin to zoom it in and note the fact that we're at the top of that long-term range. Take a look at the last 3 times we came up to the top. The first time on the left, came up, reversed, went all the way back down to the bottom. Then it went right back up, hit the resistance, turned around, went back down to the bottom. Then not quite all the way up here on this third attempt, not quite all the way to the top, and it didn't make it quite all the way back to the bottom. We found support at the blue zone, started moving back up along the blue trend line that's on the far right hand side of the chart. Now I'm not saying it's going to continue to go up or reverse again, but we need to watch for indications in both directions. Indications of reversal to tell us it's going to turn around and go back down. And I think that's probably back through the 9800s before we would expect it to turn around and go back down. Or it needs to significantly break out above the resistance before we'll look for a continuation of the uptrend. Continuation of the uptrend, we need significantly positive news or information from the U.S. Maybe the raise of interest rates finally from the Fed or something like that to cause it to break through the resistance ceiling that we have found basically since the beginning of 2016. Or some significantly negative news causes this to turn back down for the U.S. and we look for it to go back down to the bottom of the range. So all that's some things that we'll look for. It's difficult to buy it at the very top of the trend or the top of the range, so we need it to pull back down before we would buy it. Maybe looking for opportunities to go short, but of course right now the trend is up, so that's a difficult opportunity right now anyway. Let's take it down to the 4-hour time frame. Again, as I said, the trend is up. We can see that along the blue trend line. I think if we were going to go short and sell this currency pair, you really only have 2 opportunities to do that. Back at the orange zone, which we're already falling off that a little bit today, or the break underneath the purple shaded area. Those are really your only 2 opportunities to go short here on the U.S. franc. It needs to get through the mid-98s or at least rally back towards 99 before you would consider going short. However, going long in the direction of the trend, I think you have a couple of opportunities. First off, the break above the orange zone. If it can get through 9,900, then maybe we look for this to continue the upside pressure for the U.S. franc. On the other side, if you're going to go long, it always makes sense to go long on dips into support to improve your risk-reward profile for the trade. So buying towards the trend line, buying towards the purple zone, maybe something that we look for as we go through our week on the dollar franc. Moving on to the the EUR-USD, the euro versus the U.S. dollar. Just the opposite here. We're at the bottom of a run back down. A couple of weeks ago, we were studying this somewhat descending pattern here, the 2 black lines that you see here on the chart. A couple of weeks ago, we were discussing that. The breakdown of the green zone gave way to a fall back down towards the 1.10 level, or sorry, 1.10 level late last week, and a push underneath there, now sitting underneath 1.1 and the blue shaded area. Very interesting there, that significant price level, 1.1000. If it could stay underneath there, we're back into the low 10900s, and of course under there, we could even see some more significant bearish movement. Probably the area to focus in on today will be this, really maybe this week, will be this blue shaded area here between 1.1000 and 1.1030, because we know as long as it's underneath there, history tells us it goes back down towards the low 1.0900s, the orange shaded area. If it breaks back above the blue shaded area, then we look for it to go back up. So if you're looking to go long and buy this, I don't think you want to do it underneath the 1.1000 level. It just doesn't make a lot of logical sense to go long underneath a significant price level like that, it would need to get back above it before you'd go long. Otherwise, potentials to go short into 1.1 today if we get some positive news out of the U.S. Take it down to the 4-hour time frame. There it is right now, sitting underneath 1.1 thousand. Again, I don't think this is a good place to go long until or unless it changes its mind and gets back above the 1.1 thousand 30 level. We could look for an opportunity for this to go back up again. Staying underneath 1.1 thousand could provide some intraday opportunities to take it back down to 109.50 or lower, 1.0900 for the euro dollar this week. Take it on over to the GBP USD. Of course, long-term view, daily time frame. Of course, clearly everybody knows we've been in a downtrend. The British pound's taking some significant pressure as it pressures all the way down into multi-decade lows. 1.2100 being the bottom of our chart. Let's go ahead and zoom it in here on the 4-hour time frame. We see this period down here. Look at all these colored shaded areas. We looked at this last week. We kind of got some more detail on the chart with all these 4 shaded areas at the bottom: orange, purple, green, and blue. And it's just been bouncing around in here for a couple of weeks now. Maybe a little bit of a consolidation type pattern, maybe a triangle pattern. You look at the falling highs along that black trend line, you see somewhat of a rising low, but more steady lows, or more of a shallow angle to the bottom. So I would think that in a similar fashion that we just looked at the euro dollar pattern, descending triangle pattern on the euro dollar from a few weeks ago, we might be looking for something like that here on the pound dollar. A breakdown of the support lows, the blue shaded area, will likely look for the continuation of the downtrend. And it's going to take some significant effort to change the direction for the GBP USD. Zoom it in one more time. Kind of squeeze it out like this. If you're looking to do anything, if you're looking to go short, of course at this point makes more sense. Take a look at the last several 4-hour candles, 1, 2, 3, 4, sitting underneath the green shaded area. Let me take this line off. Sitting underneath the green zone, 1.2170, 1.2195 is your resistance. If you're looking to go short, that becomes your opportunity to go short into the green zone. Targeting the blue zone, of course, which is our current lowest low. And of course, if it can break 21, we'll look for this to continue to go lower. And of course, above the green zone, probably looking for a little intraday change for the GBP USD. Take it over to the USDCAD. Had a little bit of a difficult time with this one last week. The market was back and forth, a little bit volatile. Look at last week up here, top right-hand corner of the chart. Let's zoom it in one time. Take a look at this. We saw the rise to the green zone, the fall, the rise, resistance, the fall. Now we're back underneath the orange zone where we've recently found support. So for the day today, as long as it's underneath that orange shaded area, 1.3150, I think we have a little bit of a bearish bias right now for this currency pair. Underneath 3150, 3175, which is the orange shaded area, back towards 3100, 1.3080, which is the yellow shaded area, is our next possible opportunity. And even further back down to the pink shaded area where the 100 period moving average sits into the low 1.3000 is a possibility. So if you're looking to trade the US CAD today, I don't think this is a good opportunity to go long until we reach into a significant support level. Otherwise, back above this orange shaded area could look for some upside back towards the green zone at minimum if it gets back above 3175. But right now, that's your key player right now for the US franc, or sorry, the US CAD. Underneath the orange zone continues the bearish pressure. Only if it gets back above it do you look for it to go back up for the US CAD. Moving on to the USD JPY, a little bit of consolidation, congestion over the past few days, just been kind of bouncing around between the green and the orange shaded area. Green zone, 103.20, 102.90. Orange zone, 103.95, 104.25. We've been bouncing around in there for a couple of weeks now. We need a breakout if we're going to see significant movement here for this currency pair, and we just haven't seen it. I do have an upside bias because we're above the 100 moving average. We're continuing to pressure higher, but if we're going to go long on anything, to me, again, it always makes more sense to go long on a dip to support. So that's all the way back down here at the green zone. So I don't think we have a good opportunity for that today. 4-hour time frame, again, we haven't really broken the orange shaded area. We've challenged it. We've tested it. No real breakout there. I think a good line to watch would be this line right here, the rising lows. If we see a change in that pressure and a push back underneath the orange zone, underneath 103.95, we may be looking for a reversal here for the US yen. Moving on to the AUD USD, Australian versus US dollar. Well, let's take it out to the weekly. We've done this so many times over the past few weeks, but there it is right there, long-term weekly trend line. Definitely important to take note of here for the Australian dollar. It's been our key player for our decisions for this currency pair. Take it down to the daily. There it is right there. Let's zoom it in a little bit here on this currency. And you can begin to see how the market has been challenging and testing that red trend line over the past several weeks. Today, no different. We're just underneath that red trend line. Zoom it in one more time. Take a look at that purple shaded area. We're looking at 76.20, 76.35 at this purple shaded area just into the red trend line. As long as it's underneath there, I have no inclination to go long on this currency pair. Even though it's gone up for the past couple of days, no inclination to go long into 76.20. If anything, I might be looking for resistance and reversal from this significant price level for the Australian dollar today. And the only reason and the risk in that is that it breaks above 76.35 and starts working its way higher for the Australian dollar this week. Let's go ahead and take this currency pair down to the 4-hour time frame. And again, I don't think it really changes anything. We can see the market challenging into that purple shaded area, 76.20, 76.35. As long as it's underneath there today, even with this little rally into resistance, I don't think we want to go long. I think we want to stay short, look for it to stay under the purple zone. Risk, of course, at this point is above the last resistance high, and we look for it to head on back down towards the pink shaded area or maybe even further. Now, only thing that for me that will change that scenario is a break above 76.35. That's the risk in this scenario, to start looking for this to go higher for the Australian dollar. Moving over to the NZD USD, New Zealand dollar versus the US dollar. A couple of interesting things here on this currency pair that we discussed last week in the trade room. First off, the long-term black trend line. Take note here where it comes from all the way back into January of this year. Bottoming out down here at the bottom, went up, came back down, touched into this trend line and the 100 period simple moving average, went back up, made a new highest high at the very top of the chart. We've been going down along the blue trend line ever since then, and touching last week into that black trend line and bouncing off of it. Now this could be a reversal point for this to turn back higher again, but I think we need some significant effort for this to break through back above the 100 period moving average and change the downward slide that this has currently been in for the past few weeks. And of course, at any time, if it breaks the black trend line, we look for the significant continuation of the downtrend. Take it in, zoom it in a couple of times here on the daily. You can really get a sense of what's happened last week. The purple shaded area, 1, 2, 3 days found support, reversed back to the yellow zone. 100 simple moving average sitting here just into the blue shaded area. Blue trend line, falling blue trend line here. So we're coming into kind of a confluence of the trend line, the blue trend line, the black trend line, the 100 period moving average. I think if we're going to reverse and go back up and turn this into an uptrend again, it needs to get above the blue trend line, 100 period moving average, and the blue shaded area, which is into the mid to upper 7100s. Of course, a continuation of the downtrend, as I mentioned a moment ago, means it will need to break underneath the purple shaded area. So I wouldn't see it too difficult, and I'm just going to take this little orange box over here on the left-hand side. I don't think it'd be too difficult for us to even look for potentially a range to set up between the top blue shaded area, the orange box there, and the bottom purple shaded area. And some point we need to see a breakout of either one of those for us to see a continuation of a trend, either up or down, for the New Zealand dollar. I'm going to stick with the current downtrend, the blue trend line, and dollar positive moves for the time being. That means the closer it gets to this blue zone, 71.50, I'll be looking for an opportunity to go short for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.